What's up, guys? Welcome back to my channel. Today I want to talk about why do I trade futures, and why I use prop firms. So the main reason I trade is I've always been interested in financial independence. I remember when I was 16 years old, I went looking for my first job, and I maybe approached over 100 businesses, asking, "Are you guys hiring?" And that was the first time I really experienced the runaround like that, where I'm asking for the opportunity to gain honest employment and work a real job. And you'd be surprised at just the amount of hoops they made me jump through and fill out this application and come back this day, talk to this manager. The owners don't live here. It was just a lot of hoops I had to jump through to get my first job. And I remember that experience of just know it feeling like, wow, this is not where it's at. My whole life I really looked forward to my first job because I believed once I have the ability to work, I'll have the ability to be independent. And in a way, that is true. But I didn't realize how much getting a job really depends on just playing the game, knowing people, having connections. Truthfully, that's how I've gotten almost every job I've ever had is through knowing people, not really applying or asking people. So from early on, I knew I wanted to be financially independent and not really have to depend on somebody else's business for my livelihood. Number two, career success is rarely tied to performance. So if you want to really advance professionally, a lot of times it goes beyond being good at your job. You have to play the game. You have to, the right people have to like you, and your performance is really, it's not as objective as you think it should be. A lot of times the evaluation of your performance is based on what your boss thinks of your performance, right or wrong, right? I wanted to be able to generate value independently, where I had the ability to create value when I wanted to, on my time, on my terms, in the way I wanted to do it. And trading gives me the ability to do that. Also, I wanted to find a way to reduce the desperation of needing a job. I feel like you need a job when you have no other source of income. If you have a source of income that pays you equal to or more than your job pays you, you're really not dependent on that job. You're at that point, you're working because you want to work or because you enjoy working, and you're not forced to do anything you really don't feel comfortable doing. So I just feel like by having secondary income, it allows me to have a little more flexibility in my decision making about where I'm going to work and what I'm going to do. And I have a strong need for achievement. And I think sometimes in certain jobs, the jobs aren't really built to help you achieve anything. It's really built to help you get the job done. And that's it. It ends right there. So I think with trading, you start knowing nothing and you just learn and learn and learn. And there's so much to learn in trading that you really do feel a sense of achievement along the way as you become a better trader. So the second thing that makes me want to be a trader is that with trading, there's no real limits, right? The limit, it's really based on what you want to do. So of course, you're going to be limited by your capital and by your skill. But both of those things can change. You can improve your skill and you can grow your capital. The markets are generally fair. Sure, some participants are larger than you and have more information and better information than you do. But in the markets, for example, if you buy a stock and the stock goes up $1 and you have one share, and you sell the stock, you will get $1 in your account. That's the fair part of it. And it's generally fair. I know there's one example a couple of months ago in London where they basically undid all the trades for a day on, I think it was silver. But that's not common. That's a one-off. But for the most part, the markets, the number on the screen, that's real. You can cash that out the next day, and it's fair in that sense. If you made money, they'll pay you. If you lost money, you lost money. With the markets, there's unlimited profit potential, and of course, your profit is tied to your willingness to take risk. So the more risk you take, the more you can make or lose. And the less risk you take, the more safer your return is, right? If you want to buy treasury bonds, you can get your 4 or 5%, and get your money back at the end of the term, or you can, put your money in, just whatever you feel comfortable doing. And you are in full control of your exposure to risk as a trader. I like that a lot. Accessibility. With trading, you can trade from anywhere in the world as long as you have internet. There's a low barrier to entry. I mean, you could open a brokerage account with $200, $400 or $500. It doesn't really require you to have $5,000, $10,000. When I first started trading, they had commissions. There was no such thing as commission-free trading. So, back in my day, if you bought a stock, you'd pay $7 to buy and then $7 to sell. So the second you bought something, you're already basically $14 in the hole. And that was a barrier in itself to where you were really careful with what you bought because you just understood. For me to come out profitable on this, I have to make at least, X amount of dollars. So like today, for example, you can buy a single share of, say, Bank of America stock, and it's not a problem. Back then, if you were spending $30 on a stock, you wouldn't buy a single share because your commission is going to be $7. And I think that's a huge advantage for the new generation where they're able to trade commission free and even like low commissions on like options. Back then you'd pay the per contract fee and the regular commission fee. So I think today trading is more accessible than it's ever been, and it's also very rewarding mentally. It just makes you feel like you're advancing and you're growing, especially when you see yourself improve over like making mistakes. Like there's certain mistakes you used to make that you no longer make, and you could identify it. I think that feels really good. Influence. So financial markets decide almost every aspect of our lives, whether we're talking about interest rates or the job market or politics or price of goods. Whether you're a participant or not, market participants are deciding a lot of parts of your life. And I think by being a trader or being an investor yourself, you're able to really kind of put your vote in the market for kind of what you believe. And it's a tool. The markets, to me, it's a tool, and you can only benefit from it if you're willing to use it and learn it. Markets have existed in one way or another, and they're going to continue to exist. As long as humans have been around, there's been commerce, and I think it's just I like trading because you kind of get to be like your own little business, your own little enterprise in a way. And laws, specifically tax laws definitely favor capital versus labor. Labor is taxed at a higher rate, and there's just more benefits for capital in general. So here's why I trade futures over stocks, options, crypto, and other things. So stocks, I used to trade stocks for years. That's where I got started with trading. I traded stocks for probably 8, 9 years. With stocks, there's not that much leverage. There is something called a pattern day trader rule, which is if you have under $25,000, you can't day trade more than 3 times within a 5-day period. And there's a lot of limitations on like products what you can trade. So if you want to trade like interest rates or like certain products, you really wouldn't be able to trade if you're trading stocks. So I didn't like that about it, and it just requires a lot of capital for kind of small return because there's not much leverage. Now stocks are safer than like the other things I'm going to list, and they're safe generally because they're a good way to preserve value. So if you want to put money in something to just kind of keep your money to match inflation, then stocks probably are a good bet for you if that's your goal. I traded options for some time as well, and I found some success with options. But something I didn't like about options is options have data decay, where as each day goes on, your options lose value simply because you're getting closer to your expiration date. Um, Also, when you're buying options, you have to pick the expiration and strike prices, and that's just, to me, it's just this one extra step that it can make a big difference between a successful trade or a bad trade. And it seems so arbitrary that I have to pick some random expiration date and I have to pick some random strike price. I didn't like that much, and it typically requires high capital investment. So the for me, I think the best options contracts tend to be the more expensive ones. The ones that are far out the money, expire tomorrow. They're lotto tickets basically. So I just feel like if you really want to get into options, you have to have enough money to be able to buy good quality contracts. Because if you're buying the $5, $10 contracts, you're really just losing your money, and you should just go play the lotto instead. Um, and the pattern day trader rule. The pattern day trader rule is frustrating because with options are volatile. So if you're in a situation where you have like under $25,000 in your account and you're in a bad trade and you already maxed out your day trades for the week, your option is to literally sit on a bad trade till the next day so you don't break the rule. And I felt like that was just it was a made up rule, and it forces me to hold things I don't want to hold. So that kind of turned me off from options a little bit, like these made up rules. And the rules had actually have gotten stricter over time. A couple years ago, if you broke a PDT rule, you can call your broker up and say, "Hey, could you reset it for me?" And they do it for you a couple times per year. Now there's actually a rule that started maybe a year ago, maybe 2 years ago, that once you break the PDT rule, your broker can only reset it once per lifetime of the account. So there's no more calling your broker to reset it. So that's something to crypto. I never understood crypto fully, so I never really got too into it. Crypto, I still don't fully understand the intrinsic value of it. Like if it's a currency, or if it's digital money, like why can't I buy gasoline with it, or why can't I pay taxes with it, or I can't buy an iPhone with it. So I never liked that part of crypto. It's unregulated, so a lot of the scams that are really kind of banned from other markets are probably going on in the crypto markets. Um, and the value of crypto is not detached from other asset classes. So when crypto first came out, the idea was, crypto is a hedge against the devaluation of the dollar. And I believe that. And then until you start seeing crypto moving just really in sync with almost all the other asset classes, it's like, wait a second, if the dollar's losing value and inflation's 10%, crypto should be up. Instead, crypto was down like everything else, which means it was really a speculative bubble. So that turned me off a little bit. And then futures. Here's why I trade futures. Futures trade 23 hours a day, 6 days per week. It's highly liquid, and it's low capital requirements. Like you can take a position with relatively low capital in good positions. Unlike options, like you're not buying a lotto ticket. Like you can actually get into, like, let's say you're trading micros, you can get a good contract for relatively little bit of money. Um, it offers you flexibility. You can trade a lot of different assets. And there are tax advantages for trading futures. It's a 60-40 tax, where 60% of it is taxed at long-term capital gains, and then 40% of it is taxed at short-term capital gains, which is, it helps. There's no implied volatility, meaning if the price of the contract increases by 1 point, then whatever the value of that point is what the value is in your account. Like you're not calculating based on data decay and implied volatility and all these other things. There's no guesswork, right? If it goes up a point or down a point, you know how much you made. The pricing is simple. There's lots of different product types you can buy, and it has leverage like options, and it has no PDT rule, which is fantastic. And then here's why I use prop firms. So prop firms give you even more leverage. So with prop firms, the max you can lose is what you paid for your evaluation and maybe for your data fees or reset fees if you needed to reset. But let's say you spent $200 on a prop account and you have a drawdown of like 5K. I just feel like it gives you a lot more upside, and your downside's capped. Like you're not losing your own money. So even if you're, let's say you're starting out and you're failing and you're blowing up accounts, you're probably still better off blowing up prop accounts than you're blowing up with your own money, because the amount of money you would need to trade futures, if you're losing that money in real life with your own money, you'd lose a lot more than you're losing when you're trading with prop firms. Um, Using prop firms, they taught me a lot about risk management. Whether we're talking about the drawdown rules or the daily limits and things like that, it made me think about trading in a different way and just made me set up my own risk management parameters to keep me in line. And actually made me a better trader. There is an educational part of it, and I see a lot of prop firms give a lot of data and information and just tips and resources to traders to help them become better traders. And I think just building that community has value to me as a trader. And profit targets. So with a prop firm, when you're trading on an account with them, you have a goal. You get an account and there's a profit target in mind. It's not just you trading what you feel like trading when you feel like trading, and oh, I made $10 here, I made $100 here, I made $1,000 here. It's you have a definitive goal that you have to make a plan to achieve. And I think that's a lot better, because when I was trading my own money, it was just kind of, I'd go in the markets every day and just kind of see what I felt like doing, and whatever I made, and there wasn't really any it wasn't structured. I wasn't as structured as I could be. I think trading with prop firms and having the kind of goal orientation of I got to make this much money, and having that as a focus, it made me a better trader because it made me more disciplined in my approach. And there's opportunity to make a lot of money with prop firms if you're a good trader. If you're a good trader, you can pass a prop firm evaluation, and you can actually make a good amount of money and withdraw it. And I think the risk reward is great, and it helps you get around. If you have a prop firm account, it helps you with the issue of margin requirements. So like if you're using your own money and you want to buy e-minis, you need a good amount of money to do that. Versus with a prop firm, you could spend maybe a couple $100, if that. You could get like some accounts on sales for less than $100, and you can trade e-minis in those accounts. Even if you're just getting like exposure and experience trading e-minis, I still think there's value in using a prop firm for that purpose, because when you're using your own money, you're limited in what you can trade by how much capital you have on hand. With a prop firm, you're really able to use their money and just really build your acumen, your ability to trade. So for me, I think prop firms just make a lot of sense. And I hope you guys enjoyed this video. If you have any questions, just please leave a comment. You can follow me on Twitter at HonestPropTRDR, and Instagram is HonestPropTrader. So please leave comments if you have any questions, and thanks for watching.